Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, the central administrator for private retirement schemes in Malaysia. I'm Brian Fernandez and it's Wednesday, the 22nd of March. And we have Craig Erlam, Senior Market Analyst at Oanda, coming out to us from the UK. Craig, as always, great to have you on the show.
Always a pleasure.
Now, Craig, for a start, what's your view on market sentiment at the moment, uh, particularly in Europe?
I'd say it's tentatively recovering. I think the shock of the last couple of weeks can't be understated. No one was really prepared, even though we've talked about what the negative repercussions of interest rate hikes of this scale can be. I don't think anyone was really prepared for the failure of three US mid-tier banks and then Credit Suisse, a household name, in such a short period of time. But I think we are seeing signs that sentiment is improving, and I think there is an element of people being a bit comforted by the response that we've seen from the regulators, from the central banks, and from the governments in order to deal with these things quickly and decisively, in order to ensure that it doesn't spill over into a much deeper crisis. And as long as we can now go a few days, a couple of weeks without further issues, then I think people are going to feel really quite relieved, and that could really provide a bit of a boost to sentiment.
Okay, Craig, before we come back and get more of your insights, let's take a look and see how regional stock markets are performing across Asia. We start with the Straits Times Index, that's up 1.43% in Singapore. We have Bursa Malaysia trading at it's up 0.06%. Shanghai is up 0.28%. The ASX All Ordinaries is up 0.85%. Now, the Nikkei is up a whopping 2.11%. The Hang Seng is up 1.94%. And the Kospi rounds up the numbers. It's up 0.97%. Craig, basically that echoes your sentiment. Markets are optimistic at the moment. But tell us what your expectations are, because everyone's looking to the Fed move later today. Um, 50 basis points was talked about previously. That's all changed now. What is your view on the rate hike that is expected?
So this really has been a year of kind of a pendulum swing. We've gone from coming into the year incredibly optimistic. That January moves that we saw was really positive, and it suggested that 2023 was going to be a great year. And then we started to see the January data, which showed that the employment sector was hot, the retail sales, the consumer spending were hot, and also the inflation was stubborn. So the pendulum swung the other way. And then we started to correct, and then we obviously get the banking crisis, and we've seen the pendulum swinging so aggressively in either direction that it's hard to really get on board with where the markets stand in any way, shape, or form. And then prior to this banking issue, the pendulum had swung in the way of a 50 basis point rate hike because of that January data. And I always thought that was overblown in much the same way as I thought January was overblown. And I think that's I think the banking crisis has made a 50 basis point rate hike basically impossible because the Fed would really cause a jolt in the markets. I don't think it was ever the likely scenario, if I'm perfectly honest. I think 25 basis points is what they'll go with. There is an argument for pause, not necessarily because the banking crisis is now out of control, and there is obviously concerns about what message that would send. But because they've risen rates so far, you could argue that these financial stability concerns justify a pause. I mean, it doesn't have to be the end. It could just be a pause for now while they evaluate the data and what's happened. But I do think the Fed is going to be cautious about the message that will send. And if they pause, then they may think that this message that they're sending to the markets is that they're concerned. So I think, like the ECB did last week, I think they'll persevere with the pre-planned hike, which is going to be 25 basis points. And again, like the ECB last week did, I think they may then refrain from committing to what will come next and send the message that they are evaluating the data, that they'll see what the negative repercussions of these recent market volatility will be on tightness in the markets, and then they'll go from there and remain data dependent. So I think that's going to be the course of action, but we should prepare for a bit of volatility because I think everyone, maybe a large group, may be surprised at some point.
Now, Craig, final question. What are the trading opportunities now that you see that investors could take advantage of?
So, I mean, I guess when you get such massive moves in the markets as we have over the last week and a half, there's trading opportunities galore, depending on, of course, what how the news flow plays out. If we do see another bank start to fall into difficulty, then risk appetite will get crushed again, because people will be concerned that more and more names are going to be added to the list. But we have seen massive swings in the markets, whether you're looking at oil, for example. Oil, we've seen trading much lower on the back of this because of the economic concerns linked with the move. And therefore, it's trading well below the range it was trading in from December through to March. And that may not be justified if we do see markets continue to bounce back, and if we do see these banking issues contained. Of course, you look at gold, and we've seen that rally incredibly over recent weeks. And again, that's heavily dependent on risk aversion in the market. So you can justifiably see that correcting quite considerably. And then obviously when you look at equity markets themselves, they've had a really tough time. And yes, we've started to bounce back over the last couple of days, but they haven't recouped their losses. So I think everywhere you look in the markets, there's been massive moves over the course of the last week and a half. And ultimately, assuming the news flow falls in your favour, that does present plenty of opportunities.
Now, Craig, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you.
Now, I'm Brian Fernandez, and we've been speaking to Craig Erlam, Senior Market Analyst at Oanda, on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, the central administrator for private retirement schemes. This show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.